What's good, everyone, and welcome back to the Financial Forward channel. And today we're going to talk about how to legally avoid taxes as a day trader using trader tax status TTS. So disclaimer, I am not a CPA or a financial advisor, so please consult them for financial help. But I am a day trader who has gone through the process of significantly and legally reducing my taxes through a CPA and using TTS. So I'm going to share everything that I know, everything you need to know as a day trader to significantly reduce your trading taxes. So we'll look at what TTS is, how to qualify, the mark-to-market election, all the write-offs you can have with TTS, and all the secret in-depth details that they don't tell you about. Okay, so grab your notebooks, buckle up, hands to feet inside the right at all times. Let's go get it, baby. So trader tax status TTS is a tax status for day traders and swing traders who trade stocks enough to be able to classify their trading as a legitimate business operation. So when you qualify for TTS, it legally unlocks several tax benefits for you, such as significant income deductions via income expenses towards your quote unquote business. I personally know several professional day traders that use TTS, and each year they owe less than half of what they would usually owe if they didn't have TTS. Now, for TTS, there is no election for this. It is an optional tax status based on facts and circumstances alone confirmed by your CPA, okay? Basically, that means that you can qualify 1 year and not the next, depending on if you've met the specific qualification. So it all depends on what you do in that year of analysis, all right? Now, how to qualify for TTS. So there are 3 big qualifications that must be met, along with a few smaller qualifications. Now, the first qualification is that the CPA must be able to know that you're trying to profit from trading daily market movements, and your holding period on those trades is less than a month on average. So this means that you're actively trading on a daily basis, and when you go to sell that stock, on average, you can't hold it more than a month, which is easy to do as a day trader. Now, my swing traders, it's a little bit harder because I know y'all, you buy time on the contracts, but from trader to trader, if you're getting good entries on your swings, your trade should play out in under a month, okay? Maybe I'll make a how to swing trade video soon, okay? Now, the second qualification is that your activity must be financially and quantitatively substantial. So for example, if you have a 6-figure job, yet you're trading with a $2,000 account, that's not substantial, right? This is where, people get it messed up. Even though you're trading regularly and, months at a time, compared to your job, that $2,000 account isn't substantial. But if you're, doing it enough, quantity wise, you technically can argue that you still qualify, which may get you over the hump. Just ask your CPA about that one, all right? Now, the third big qualification is that you must carry the activity regularly and continuously. Now, this is where most people mess up. People will actively trade for a year and a half. They start to trade horribly. Then they, stop trading either altogether or for months at a time, which is very problematic for TTS because that's showing your CPA that trading isn't substantial for you and your income. And if I'm a CPA, that's giving me vibes that you really don't need this, okay? So that's the 3 biggest qualifications for TTS. Next, we'll go over some of the smaller qualifications that your CPA is going to be looking for. One is the volume test. How many trades a day, a week, a year are you trading, right? They like to see approximately 1 to 2 trades per day on average. My swing traders, this is going to be harder for you, okay? Next is the frequency test. How many days of the week and a month are you trading? CPAs like to see a minimum of about 75% of the year. Now, I personally trade and take trades about 80 to 85% of the year. There's 252 trading days in a year, so that means that I only go about 40 trading days of the year without taking a trade. So, it's easy for me to qualify. Now, all my professional traders know that every trading day is not tradable because of, horrible choppy price action, especially in 2023. So because of that, they only require about 75% of all trading days. So all in all, you do need to avoid sporadic lapses in time where maybe you trade a few weeks, then take a month off, then trade a few more weeks, then take another few weeks off. It must be done on a regular basis, okay? So next is the time test. How much time per day are you spending trading? So CPAs like to see at least 4 hours per day, including pre-market planning, screen time and execution, and a post-trading review. So, let's say you start at 8 a.m. with your pre-market planning, finding levels, looking at outperformers, underperformers, watching Yahoo Finance until the market opens. Market opens at 9:30 a.m. You trade to noon, eat lunch, come back and journal your trades. Easy 4 hours per day you can disclose on your taxes, all right? The next qualification is your intention. Is it a hobby, primary or secondary source of living? Now, it can be a secondary source of income as long as it's substantial, okay? And then is the business operations test. Do you have a trading setup, multiple monitors, a dedicated area in your home for business operations? Do you have the proper education for trading? Do you have above average knowledge in the stock market? Do you have subscriptions and software that a normal trader would have? These are things that will be considered, okay? And then finally, is your account size. Now, this one is the least important, but they like to see an account size of $25,000 or more that gets you over the pattern day trader, the PDT rule. Since getting over PDT is a huge benchmark for traders and supposedly validates you, but it's not necessarily a qualification for TTS, just a good additive, okay? So whether you qualify for TTS or not, remember to always claim your losses and gains, even if they are minimal. You get a maximum deduction on your taxes on losses up to $3,000. This is called the tax loss harvesting rule. Now, if you don't claim your losses, you don't get to offset any income. And if your losses are more than $3,000 and you ended the year unprofitable, you can carry those losses over into the next year. By the way, if you are unprofitable, check out our free money English course. We'll get you right, all right? So now that we've gone over all the criteria for qualifying for TTS, now you need to prove it, right? So aside from your brokerage transactions, the biggest proof that you have is journaling. Journaling is so important because it is your written business plan on a daily basis, right? You need to journal to show your trading plans, right? If I were you, I journal my levels, my pre-market watches for that day, why I entered a trade and what I disliked or liked about my execution of each trade. And I'd use a trade journal program or software like TradeZella to journal your trades, all right? Now, journaling also shows that you're going above and beyond of what some random investor would do, because this is your profession, this is your business. This journaling is also very important in the case of an audit, because since day trading is its own little niche in the tax world, day traders get audited more than regular people do, all right? So tracking your expenses is also a part of just your duty as a taxpayer, where you're using like QuickBooks or Excel to log your business expenses, okay? Now, for your expenses, make sure to log the date of transaction, the vendor, what it was for, short description of what was paid for, and the exact amount to the penny, okay? This is basically written documentation to support your claims in case of an audit. So please just have backups and backups to your backups, right? Physically and digitally keep all receipts of anything that you plan to write off for 7 years because of the statute of limitations. And just be very, very thorough. Meals, mileage, and travel expenses are the most audited. So just be very precise and descriptive on those three factors, okay? So what doesn't qualify for TTS? So things that do not qualify for TTS include trade copying services, using a money manager or advisor, ATS or automated services, or funded brokerages, which you should not be using anyway, and trading out of a retirement account like an IRA, okay? So what happens when you do qualify? You'll have the ability to treat trading as a business. You can deduct trading expenses and utilize business write-off. So you'll have the eligibility to make the 475 mark-to-market election, which is a very, very, very powerful election. What this election does is, one, it eliminates wash sale adjustments completely, and two, you can deduct unlimited losses in a given year. So for the average Joe, they get that maximum of $3,000 of losses deducted from their capital gains because of the tax loss harvesting. Well, with the mark-to-market election, there is no cap on your losses. So if I have $20,000 in losses, instead of only $3,000 in losses being deducted from my capital gains, I get the full $20,000 deducted from my capital gains. But here's the craziest part about this. So the mark-to-market election reclassifies gains and losses to ordinary gains and losses. So any losses that I have offsets my entire income, including business income and job wages for the whole year, not just my capital gains. So let me give you an example. Let's say you have a $100,000 W-2 and you have $70,000 in losses. You'd only be taxed for $30,000 in gains instead of the old method of being taxed at $97,000 with the tax loss harvesting. And then also, your trading will be subject to the QBI 199A deduction as a specified service trader business, SSTB, which is a 20% deduction on your net income after expenses. Example, so let's say you make $50,000 in the stock market and have $10,000 in trading expenses. You're going to be taxed at $40,000. Well, with the QBI 199A deduction, in this case, you get another $8,000 in deductions on your taxes just by having this election on top of being able to pick the expenses. Now, if you're using the mark-to-market election, notify your broker that you're using it. Depending on who it is, they may or may not change the way your 1099s are reported. Not going to go into too much detail, but all I'm going to say is that Robinhood and the mark-to-market election do not mesh well. You shouldn't be using Robinhood anyway for trading, but that's another topic for another time. Now, when including tax documents, you need to submit your trading activity to your CPA without the wash sale adjustments. That means either notifying your broker that you're using the mark-to-market election or somehow sending your CPA a list of all your trades without wash sale adjustments by sending them a spreadsheet of all your trading activity for the year. Now, if you make the election, you don't have to worry about wash sales, but you have to make sure that the documents you give your preparers do not include the wash sales, which you can request from your broker, except Robinhood. Now, another thing, any open positions that you have end of day on December 31st are treated as sold. So it's very important to begin planning before the year's end. Now, unless you tell your broker that you're using the mark-to-market election and they change your method of accounting for you, you will have to manually calculate the fair value of these open positions, and you'll have to realize your unrealized capital gains and losses for that year. So let's say you have Amazon shares that have gone up $3,000 in value by the end of the year, and now you have a $3,000 unrealized gain. Normally, you would not realize those gains until you sell the position. Well, with this election, you would realize those gains as of December 31st for the $3,000. Then when you actually sell that position, you would reverse it and take a $3,000 loss the following year, okay? Another thing with this election is that you are not subject to the net investment income tax, the NIIT, because this is no longer considered investment activity. It's ordinary income. So if your income is over that $250,000 threshold, depending on if you're single or married, you avoid the 3.8% net investment income tax, okay? Now, items that you can write off using the mark-to-market election include any expenses associated with trading, like software costs, membership, subscriptions, education and training courses, computer, internet, phone bills, office expenses, office supplies, margin interest, market data subscriptions, a portion of your rent and mortgage interest, property taxes, utilities, any indirect expenses you can write off. And then depending on your circumstances, travel, automobiles, and meals can be written off too, okay? So one thing to keep in mind about the market election is that tax reporting becomes very, very complicated. You have to report a change in accounting method. There's multiple legal disclosures you have to make. Your risk of being audited skyrockets, and it's more time sensitive, okay? So keep that in mind. Now, how to qualify for the mark-to-market election. So to qualify, you need to attach a written statement to your return stating that, one, you're making the 475F election, 2, stating the first year for which the election is effective, and 3, the trade or business name for which you're making the election, okay? So please remember that you need to make the election to the year prior to using it. So if you want to use the market election for the year 2024, which is coming right up, you need to make the election for the year 2023 by April 15, 2024, which is a timely filed tax return or extension. There is no wiggle room or elections for this. It must be done by April 15th. Now, let's say you make the election on, your 2023 taxes for year 2024. Come 2024 tax time, you have to file Form 3115, which is an application for change in accounting method. Form 3115 is a big, complicated form you have to fill out. You have to make, legal disclosures. You have to disclose your eligibility that you qualify for this election. You have to cite different guidance you've used for these. It's a whole in-depth interview that your CPA will have with you, okay? This form must be filed in the year of first use, all right? Now, there's another form your CPA will use called Form 8275. If they don't mention it, make sure to ask about it. That form is an important disclosure statement because there's a bunch of issues that may arise when someone has a trading business because of how much you'll deviate from the traditional way of reporting taxes. The first reason why you need to make these disclosure statements is because of the way you're reporting the income, like trading expenses. So trading expenses is a Schedule C item where people report their self-employed income. However, every year that you're trading and reporting, you're going to be reporting a Schedule C with zero income and just losses. Now, if you have losses every year for 3 consecutive years, that's technically considered a hobby, and you have to disclose that this is for trading, this is for a trading business and not a hobby. Otherwise, your expenses are limited to your income for hobby, and you have to make sure that they know that this is not a hobby, okay? And we can go on and on about the different disclosures. So I highly recommend before the end of the year, finding a good CPA who is seasoned with TTS and mark-to-market election knowledge. And believe it or not, there's not many out there. So I'm just gonna say this, okay? If I were y'all, I would literally test the CPAs on their knowledge of TTS because this is dealing with taxes. And the last thing you want is the IRS on your back, okay? So just remember this thing when finding a CPA for this niche: good things don't come cheap and cheap things don't come good. That's all I'm gonna say, all right? I may come out with another video discussing some of the things we as day traders and investors should know. So just be on the lookout for that very soon. That's gonna wrap us up for today. Make sure you like, comment, subscribe, share this one with everyone you know. I love y'all. From yours truly, Financial Forward.